right, now we speak a lot about how you should invest, but are you curious about how other people invest and how people in general are investing in the mutual fund space? Well, I was curious, and so I thought, why not ask somebody from the largest mutual fund in the country by assets under management? And I'm joined today by DP Singh, the Deputy Managing Director and Joint Chief Executive Officer of SBI Mutual Fund. DP sir, thanks so much for taking the time, and Happy New Year to you. The first question, you will have data, of course, up to December, but the official data is till November. And if you look back over the course of 2025 broadly, what are the trends telling you about how people have invested in your schemes in particular?
First of all, Happy New Year to you and all the viewers, Alex. Thank you very much for having me. See, when you have to look at the data, you have to look at the data with wearing 2-3 different lenses. When I look at the overall data, what is telling me that most of the money is coming in large cap funds, mid cap funds, large and mid cap funds, blah, blah, blah. But the moment I change the lens and take out the SIP inflows, the data says something different. The incremental SIP registration and the incremental SIP lump sum inflows are coming into the funds which are not these funds, which are the hybrid funds, which are equity savings funds, which are arbitrage funds, which are balance advantage funds. So the answer to the question will be in this way, that long-term investors who have given a mandate of equity, they continue to put money in equity in a very calibrated manner. And the new investor or lump sum money which is coming is mostly coming into the hybrid funds.
Here's the thing, and interestingly, we've had certain other commentators, certain individuals have started up new funds, etc., talking about this, and this is investor behavior. Before 2025, it would be fair to say that investors were saying dil mange more, right? Where they're saying, if you're giving 18%, 19%, they were saying, why are you not giving me 23%? In your experience, have people now lowered their expectation? Is that why people are now gravitating towards hybrid funds? Because they're realizing that equity is not done very much. They want to protect their downside, but they also want that sweet spot.
Yeah. The answer is again in two ways. The SIP investors are not worried too much. They still continue to put in money in the equities because they are enjoying the benefit of rupee cost averaging, the concept which is there. Right? So they continue to hold on the mandates, and they're giving new mandates also in the same funds. But the new money, new lump sum money is coming. Yes, what you are saying is absolutely right. They are finding a multi-asset allocation fund because of the fact that people have seen a rally in gold and silver that is attracting them. And then we have got a lot of money coming into gold and silver funds itself, fund of funds, ETFs, etc. So that's another category which has but that has been general behavior. Whatever asset class does well, people want to follow that. But it's not something which is very dangerous level. This is a muted good numbers, but yeah, when see that's how it is happening in this current financial year, and people have really changed their behavior from putting money, lump sum money into equity funds to hybrid funds, and they are enjoying the benefit of taxation also, tax benefit, tax efficiency also.
So now, if we were to drill into that hybrid fund category, DP sir, because this is a pretty broad category, and you have schemes that are catered to very different objectives. Like, for example, you take an arbitrage fund and it's meant for your shorter term needs, maybe slightly more than your liquid fund in terms of risk profile, but it's still trying to give you your FD plus return, right? And you have your balanced advantage fund, which serves a different purpose, a multi-asset fund, which serves a different purpose, your equity hybrid schemes that serve a different purpose, conservative hybrid. So when you look at that category and you're saying that people are putting lump sums into this, what is the behavior within that subset of hybrid?
Yeah, if you talk about the arbitrage fund first, the arbitrage fund is generally now being replaced by what you call the people who have been putting money in liquid funds or the bank deposits of the shorter tenure. They find it very good that arbitrage is a good alternative to all these products. But the moment you go further, then when as you talked about anybody having more than 18 months to 24 months kind of thing, they find equity saving fund or this your multi-asset allocation fund as a good fit for that. And the moment it's now there are three things to be seen. One is probable returns. Second is the tenure to which money is can be put in that fund, and the third is tax efficiency. And all the three factors play a major role. Not only the returns and the education has reached the level where investors are aware about it, and I think that's the way it's happening. And arbitrage fund per se, people are parking money where they don't have any visibility of tenure, whether they need money after 2 months or they need money after 1 year. So generally, everybody and anybody with target audience is that category of funds. So it depends upon the investor psyche. Depends upon the characteristic of the money which is available to for investment, and then what is my risk appetite. So all these things are playing, and tax efficiency above all is playing a big role because people have understood the benefit of compounding on the deferment of tax also.
Correct.
So
Important point.
that's
Important
very,
point
very
that you're raising. But I do want to ask you, DP sir, about specifically the multi-asset fund. And I know that you mentioned that investors have gravitated, as they normally do, towards asset classes that work, right? And gold and silver has done incredibly well. You're talking about 65% returns for gold if you look at a year-on-year comparison. But the question that I'm asking is that a little bit dangerous? Of course, you talk about recency bias. Ultimately, a large part of what you do, and I'm not talking about the fund management team, I'm talking about what you do, is managing expectations of people that invest with you, right? And so therefore, would you say that people need to curtail their expectations a little bit with multi-asset funds?
No, I think the other way around, Alex. The thing is, I think this is very, very less dangerous to put money in multi-asset fund rather than putting money in the gold fund or silver fund directly. Number one, see, the expectations can be brought down by the investment manager's behavior itself. This is the portfolio manager's responsibility to see what is the view in the market, whether you should come out of gold at this point of time, or you should continue to remain. Now, anybody who has put in money in gold fund will continue to remain there, and whenever he withdraws, he will be subject to the taxation. Tax will trigger. But here, just to give you the example of SBI multi-cap fund, in the recent past, after the big run in the gold, we reduced the weightage from as high as 14-15% to 3%. Now, investor is not aware about that, but we have done it. He says that we are doing it. Then we increase it to 4-5% also. And the same is the case in silver. We decreased in gold and increased in silver. Now we have brought it there as well. So this is the behavioral thing which we are taking care of. It is less dangerous than putting money directly into those classes. And see, the best part is while doing so, investor is not bothered about the trigger of taxation.
Yeah.
That's the beauty of options.
Yeah, absolutely. I want to ask about the demographics as well, because I find this fascinating, DP sir. And of course, a lot is said about the penetration that you have specifically because of the fact that you come from the stable of State Bank of India, right? And so therefore, you'll be able to tell us what the demographic of the investor for you is. Are there more female investors coming through? What about the tier 2, tier 3 towns and cities? What are the kind of ticket sizes of people investing? All of that, if you can tell us.
No, it's continuing to be stable. 33, one third of the investors are coming through this by females, and 67% overall. But when we look at when again differentiation between the top cities and the below 30, the difference is there around 4 to 5%. Like for metros, it is around 37-38%, and for the smaller towns, it is around 30-31%. So both ways. Now again, looking at the demography, we don't get bogged down by just by the data, because we know in so many cases, especially in the smaller towns, investments are being kept in the name of the female, but is being managed by the male. Whereas in the case of the metros, the independent female are managing their own money, and this is so in smaller town also, but we can't have any data. This is behavioral thing. this is out of our just experience or talking to somebody or doing some little survey, which comes into play that some women investment is there in women's name,
Sure.
but the details are known to the male members in the family.
Understood.
But yes, the data is like this only.
Sure.
When around 1/3 of the money is coming from female investors,
Yeah.
out of which when a little higher bias towards the major towns, but the smaller towns are also not far behind.
Okay, but let me ask you this last point, which is SIP behavior. And I've talked about the fact that durable money continues to come through in equities. But are you seeing any other trends within that about who is investing through SIPs?
Yeah, no, there's another trend, very, very interesting trend we have seen. The cancellation is also very, very large.
Okay.
But new registrations are more than that, so that the stability is continuing. It's not that today, this month, the money coming from the accounts of these investors is same 28,000 crore, 29,000 crore, but the 20% of the investors, 25% of the investors are different. It's coming from the different set of people. The earlier set of people, either they're removing, they're redeeming money, they're canceling their further SIP. But the new investors who are coming are much bigger in numbers than the previous number. So there could be some same investors coming in some different fund. There could be some, and again, we can't get that kind of data. But yes, the gross numbers and the net numbers, the differential is as high as the net numbers are around 35-40% of the gross numbers as a registration number.
Interesting. And a lot of young people also coming into the fold.
Yes,
thank you so much, DP sir, for taking the time. Pleasure speaking with you as always, and wish you all the best in 2026.
Thank you so much. Thank you, Alex. Always a pleasure talking to you.
It's my pleasure. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.